If you want to make $10,000 a month from trading, in order to get to that level, you need to first find consistency. And a lot of traders struggle mainly because they don't have the discipline, they don't have the right mindset to get to that level in terms of the returns. A lot of traders look for shortcuts, so they end up skipping a very important part of trading, right? Which is building discipline, building rules, finding a strategy that works for you. So they're not really able to develop that edge that a lot of traders need. I think every trader needs to have a certain step-by-step process to become a successful trader, and it's not an easy path, right? So in today's video, I want to focus on helping you grow a small account, because that's, I think, one of the best ways for you to evolve as a trader, because there's certain things that you have to focus on when you first start off as a trader. Now, if you skip it because you have a lot of capital, you try to start with $10, $20, $30,000, I think that's an overkill, especially if you're just starting out. I think the sweet spot to start and grow an account is gonna be $3,000. Now, I've grown multiple small accounts in the past, more so as a challenge, and try to see how I can help other people, grow their account. And the things that I'm going to mention in today's video are what I found that works very, very well, not just for me, but also for the people in my community that have grown their account from a very small account to a substantially large account. Now, just keep in mind, growing an account, in my opinion, is not the tough part. I think the harder part is once you grow that account and you get it to a certain level, that's where you pretty much have to face different challenges as you get to a different part of your trading account. For example, if you're starting with 3,000, right, you're gonna have different challenges. Once you get it to 15 to 20,000, you're gonna face different challenges. And then when you get to 25, 30, 40, 50, as the number grows, different challenges. So don't be fooled with mindset that, hey, you're not ever going to have any challenges once you grow the account. Oh, wow, now everything's gonna be easy in terms of trading. That's not true at all. When your account grows to a certain level, you are going to need to adapt. So in order for you to make $10,000 a month, you need to first start very small. You need to be able to know how to grow an account to get to that level. You don't want to just start with, all right, I'm going to put in 100K and I'm going to make 10% of that and boom, I'll be there with making $10,000 a month. That's a very wrong mindset, because starting off, you're going to build a lot of bad habits, and the best way to avoid all of that is to grow a small account. Now, you are going to go through a lot of struggles, like I mentioned, and this guide in today's video is going to help you focus on how you can avoid majority of the mistakes, if not all. Now, I just need you guys to drop a comment and let me know what is one of the biggest struggle you have in the past while trying to grow an account. So that way, in the next video, we can address that issue as well, because again, there's some issues that I might face that you might not face, or vice versa. So first of all, let's understand the mindset of a small account trader. The biggest edge that you're going to have when you first start out is going to be your risk management, right? As a beginner trader, as somebody who's just starting out, or even if you have been struggling, the first key thing you guys want to focus on is how you can manage your risk the proper way. A lot of traders struggle with the stop loss, with position sizing, and when you're first starting out, if you can discipline yourself into building those good habits, trust me, it's going to go a long, long way in your trading journey. So when you're starting with a $3,000 account, the key thing in your trading is going to be survival. And how are we going to achieve that? By being selective with the trades that we take and proper risk management. Ultimately, in options, when you're first starting out, you don't want to risk more than 5 to 10% per each trade based on the position size that you're going in with. This is going to help you with that R multiple in terms of the risk and reward that you're risking. So if you're risking $100 on a stop loss, you want to at least be making $100 as well. Okay, and then the next thing that we're going to focus on is being selective, like I mentioned earlier. Being selective in the trades that you take is going to be very, very important in the long-term growth. Now, for example, with options, you have time decay, you have IV crush. So there's a lot of these outside factors that can affect your position, as well as strike selection and the expiration. So since we're starting from the very beginning and you're trying to grow that account, your focus should be on stocks that are not too volatile. Because when you focus on stocks that are too volatile, yes, they are going to bring a lot of reward, but the risk is going to be high. So in the beginning phase of our trading career, we want to make sure we're limiting that risk. And the only way to do that is being selective with the stocks as well, right? For example, SPX and SPY 0DT is something I would stay away from if you're just starting out to grow that account. right? In the beginning phase, focus on stocks that are gonna have weekly expirations. For example, Monday, Tuesday, you guys can trade Tesla, Microsoft, and on Thursday and Friday, you wanna switch over to next week expiration. What that's gonna do is the premiums are not going to take big hit when the trade goes against you, right? You want to make sure that on an average, you're not losing more than 10% on each trade. Now, with this kind of setup, you're not going to see crazy returns. You know, you're not going to go for home runs, obviously, because remember, we're building good habits, and in the early stage, whatever habits you feed your mind, they're going to be stuck with you for the rest of your trading career. So if you try to hit home runs on every single trade that you're taking, guess what? That's going to get stuck with you, and that mindset can lead traders to blowing their account. So if you do manage to grow that account somehow and you're still stuck with that, I need to hit a home run, you might end up over leveraging yourself or oversizing up into a trade that's going to cause you to lose all the gains that you worked on for the last couple of weeks. And trust me, I've seen that happen multiple times. So I have a question for everyone. Would you rather take a high probability trade that will give you 30% return, or would you risk it all for 100% return? I'm very curious to see what most traders think in terms of the return on these two examples. Now let's talk about the strategies that you want to implement. When you're trying to grow a small account, you want to focus on strategies that have high reward and low risk, right? Obviously, every single strategy is going to have some sort of risk, but the lower the risk, the better the trade is going to be for you in terms of risk management. So some of the strategies you guys definitely want to avoid are going to be the opening drives and the 5-minute opening range break. Now, the reason why I'm saying to stay away from these strategies is because these strategies revolve completely around the opening of the price action. So if at the open you mess up, you take one wrong trade, because there's high volatility, the rest of the day you're going to be struggling, because when you're a new trader, your mind's not really developed to be able to understand that, hey, losses are part of trading. So you want to try to start your day off on the positive note. And the best way to do that is go after strategies that have a higher reward and low risk ratio. So the strategies that you guys can focus on are going to be break and retest and the 30-minute opening range break. The only difference between the 5 and 30-minute opening range break is you wait 30 minutes from the open versus you're waiting 5 minutes at the open. So when you wait 30 minutes into the open, that gives you an idea of how the market is moving, if it's choppy, if it's giving any follow-throughs, or if there's any events. Majority of the economic events are happening around 10 a.m. So that gives you ample amount of time to digest the price action, understand what's happening overall in the market, and make better decisions. Now, if you jump in within 5 minutes of the open, that's gonna give you a more riskier trade. It might work out, but consistency wise, you're not going to see a good return long term. Now let's talk about position size. All right, position size. Now this is a topic that I see on social media. A lot of people misunderstand a lot, because when I ask them, hey, what is your position size? So when I talk to other traders and I ask them, hey, what is your position size? Especially traders who are struggling, their answer is something that I don't really expect, and that's why I want to address this particular topic in this video. They always answer with one contract, right? Which I don't understand, because at this rate, when you're going with only one contract, how do you know what your position size is? Because, for example, you have one stock that is priced at $5 versus another stock that is priced at $9. Now you're only buying one contract, your position size is going to be very, very different. If you look at the $500 position versus the 900, now that position size is almost 90% increase in dollar value, which means if you get the $5 position right 10% versus 10 or 20% wrong versus 10% wrong on the $9 position, even though percentage wise the gains are exactly the same, but because there's a mismatch in the position size, you're not going to have consistency. So your position size has to be a relative number, a dollar value, which means, let's say you have a $3,000 account. We're gonna break that account into 4 or 5 positions, which means it's gonna allow us to take multiple trades throughout the day. Remember, you wanna have more ammo to use in the market. Rather than going full port, you wanna have more options so you can be selective throughout the day. So let's say you have a $3,000 account, you divide that position size up, 700 per each position size, that's going to give you roughly 4 trades a day. Now, when you trade different type of stocks, you're going to have different amount of contracts, right? So let's go over that example again. If your position size is 700, you have an option between going with a stock that has options valued at $1 versus $5. The $5 premiums, you can only buy one contract. right? The $1 premium, now you have the option to go up to 7 contracts. When those premiums go up 10%, or they pull back 10%, relatively your profit and your loss is going to be very close to one another. And that's how you're gonna find consistency. Problem is, people don't understand position sizing, and that's where they mess up, especially growing a small account. Now, how do you increase your position size? We take that same formula. You look at your 3 weeks TradeZella account, and if you have consistency where majority of your trades you're green, your losses are under 10 to 15%, majority of your wins are 15 to 20%, that's a very good ratio. Right now, you can start to increase your position size, not by contract. It's gonna be based on dollar value. So if your position size has been 700 for the last 3 weeks, we take that 700, we increase it to 850. Now, whatever amount of contracts we can afford within that dollar value is how much you're going to buy within that position size. And one mistake you guys want to avoid is, let's say your $3,000 account within a week goes to 10,000. You held a trade that worked out very, very well. Don't position yourself based on that new account size. Position yourself based on your previous position size that you're comfortable with. So putting all of that together, the game plan for you guys should be 3 weeks of consistent position size, let's say $700. And at the end of the 3 weeks, you go over your data from the last 3 weeks to see, all right, how well is my trading working? What is my percentage rate in terms of the returns? What is my win rate? What is my risk to reward ratio? What strategies have been working out for me, right? And from there, you can build a very, very strong strategy that can help you and your account grow at a very good pace, right? Because that 3 weeks of data is going to give you a lot of information, such as what are the bad habits you have? Do you tend to overtrade? Do you tend to take opening drives? Do you tend to not follow your plan, right? Remember now, with a $3,000 account, you're not losing much when you're making the mistakes. Rather than going with $30,000, $40,000, $50,000 accounts, a $3,000 account is going to open you up to every single mistake that you might have in your trading. And you can address that within that first 3 weeks. So let's say your account is going from 3,000 to 2,500 to 3,500 and it's staying within that range. That data is going to tell you how to address that and how to fix it. So for example, let's say your account is not really growing and your losses are bigger than your wins. On an average, you're making 8 to 10%, but you're losing 15 to 30%. That means you're either holding your losses for too long, you don't have an accurate stop loss, or you're not addressing a stop loss before you jump into the trade as part of your trade plan. And when you address all these issues at the end of the 3rd week, now going into the next phase or the 3rd week, you'll be able to have a better outcome because now you're fixing all those mistakes. So rather than focusing on taking that 3,000 to 50,000, you're focusing on how can I use this 3,000 to grow as a trader rather than can I grow this account to 50, 60,000? Because when you're initially starting this phase of growing an account, the first 1 to 2 months, you're going to have all these issues that are going to arise. And these are the issues that you're going to need to fix in order to become a better trader. Now, trust me when I tell you, if you can fix these issues within that time period, I'm not saying that you're not going to have any issues later on, but if you can fix those issues as quickly as possible, down the line, whenever you do get a new market or a new problem in the market that you're not able to handle, you'll be very quick at being able to adapt to that and being able to change it as quickly as possible. Rather than what a lot of people do is they don't address those problems, they blow their account, they replenish it, and they keep that cycle going over and over and over again. And that doesn't help them in growing an account. Let me know if this small guide has helped you guys understanding on how to grow an account, and comment below what other topics I should cover if you guys would like more trade reviews or breakdown of trading strategies. I'll see you guys in the next video.